Hello, everybody. We have the one and the only James Lavish. James, thank you. You're busy. I'm busy, but I'm glad we could take a few minutes and chat a little bit.
Absolutely.
So I want to know what you're thinking. The market last week, my goodness, Bitcoin was up and the S&P was down 5%. S&P fell 5%. And then Thursday night, I thought, okay, tomorrow will be bad, but won't be as bad as today. That was worse on Friday than it was on Thursday. So what on earth do you think about these tariffs? What do you think of the different routes of possibilities? What are you seeing and what are you looking for in the next few months?
Yeah, I mean, thank you for having me. Always good to talk to you. The markets hate uncertainty. And when, what we've seen is, if we look at the markets through a kind of a Bitcoin lens, but the overall market, what we've seen is Trump was elected and this new administration came in and they have been very pro crypto, pro Bitcoin. They immediately came right out of the gates and he issued an executive order within weeks of starting his term. And that executive order was to establish a Bitcoin strategic reserve. And so that was supposedly a kind of a gating event, and that Bitcoin would rally off of that. But it didn't rally, it fell. And so it was confusing to people, the outsiders. They didn't understand what was going on. But really what was going on is that the Bitcoin investors and people who were speculating that strategic reserve would include some sort of measure to buy Bitcoin. Okay, so but there was no measure to buy it. There's only a measure to add to it in a budget neutral sense, in a budget neutral way. So Bitcoin dropped. So what we've seen is Bitcoin, after Trump was elected, had a great run to all-time highs of just about 110,000, just under that. And then it kind of faded from there. And it faded for multiple reasons. We started getting some economic data that was suggesting just more inflation. Bond prices were, they were dropping and rates were rising. And that was because people are expecting for more bond issuance, massive bond issuance, and more inflation and possibly stagflation. And so started getting some market uncertainty there. Bitcoin started to draw down, fell below 100,000. Then we get that strategic reserve announcement and it really starts getting hit and people were disappointed. And then you had a steep drawdown with market uncertainty and tariff threats, like you said. And Bitcoin draws down a total of 30% from the all-time high. And so it starts to climb back and you get this continuing uncertainty in the market. And like you said last week, then we started to see that kind of watershed moment where investors realize, oh, he is dead serious. This isn't a threat. Like he's going to really enact these tariffs. And the general market got very nervous and started selling the risk assets, started selling the S&P. And Bitcoin went down ahead of it and with it. And then Friday came along and the market opened down 3% on the opening, which was a gap down of 3%. But Bitcoin was up from the day before and it was kind of perplexing. So the question is, has Bitcoin really decoupled from risk assets? Are people looking at it and saying, all right, this is what I want to own? Like even gold was down. And are they saying, do I want to allocate to Bitcoin because there's so much uncertainty in the world? Or is it that Bitcoin drew down first and now it's found a spot where it's going to hold steady here and it's really found a bottom? It's already had that local bottom. And that's the question. And that's what everybody's trying to figure out.
Yeah. And I think everyone's assuming one or the other, but I don't think we'll know yet for some time. I'm curious, at what point do you think we can look back and see and guess which one of those it actually was? Because we don't know right now in the moment. It's too early to say, but what are you looking for to see, okay, this actually was the former or the latter?
Yeah, because the last time Bitcoin really did this in earnest was when Silicon Valley Bank collapsed. and the market started to, well, the general market sold off hard, but Bitcoin rallied after that. And so, the question is, did it rally because people were assuming that there's going to be money printing to kind of paper over the problems, the banking problems, or did it rally because people were concerned that, look, I've got money in the bank. Clearly, my deposits could be wiped out, and it may not be covered by the federal insurance, FDIC. So I want to own something that can't be touched and that I can self-sovereign. And I think that was really a big part of it, that in that moment, that people realized, oh my God, these banks, if they collapse, I could lose all my savings, or I could lose whatever's I have there. I can move it over to something that the banks don't control, get it out of the bank. But if you get out of the bank, where are you going to put it? You put it in investments, you can put it in the money market, you're going to put or do you put it in something? So that was the first real, that was the first real decoupling for a moment there. And I don't think this is that. And I don't think it's the same thing, because that was kind of an event. Now, so the tariffs, they can be seen as kind of a one-time event, in that the tariffs are set, it's a one-time repricing, and then, we move forward. They could be seen as that, and the market will adjust around that, but the fallout from it is really uncertain.
Second order effects, yeah.
Correct. So the question is, how long does it take for these companies to they have to, some of them have to pivot, some of them have to just reorganize their business around certain lines. Some of them have to build facilities here in order to start getting better margins again. So it takes time, like you said. So what I want to see is, I want to see a sustained decoupling. And even if it's the market's going up and Bitcoin's not going up, or the market's going sideways and Bitcoin is, doing its own thing, as long as it's not directly correlated to the NASDAQ, that's a really good sign to me that Bitcoin is decoupled. But to me, that's not just a couple of days or weeks. That's got to be months and months of that. And so it remains to be seen whether we're on that path or not.
And is that personal, more or less range? Or because I'm trying to get in your head about, other hedge fund managers and, people managing billions and billions of dollars, at what point would those people start to recognize what you're saying? Is it that months and months, or will they want to see quarters or years of sustained divergence?
Yeah, I think for the very traditional asset managers, you make a good point. They're going to want to see possibly quarters and years until they'll sniff it out, though. The hedge funds will sniff it out first, because they're a little bit more nimble and quicker on their feet than the traditional endowments and pension funds. But I think that's right, that you're going to have to see a sustained decoupling, but it also has to be the reason why. Why is it decoupling? Is it because of something like Silicon Valley, where you're realizing that this is a true store of value that is scarce and that people are turning to, as opposed to, this is a risk on asset that's the fastest horse in the race that people are turning to get ahead of inflation? So what's the reason that it decouples? And then you have to also go back to what's happening with the money supply, because we've all seen how Bitcoin correlates very closely to the expansion and contraction of the money supply. It's just a question of when. Is it a 4 to 6 week lag, or is it like an 8 to 12 week lag, somewhere in there? And I believe it's more like an 8 to 12 week lag. And Michael Howell does a great job of tracking this. But you're as you look at that, is the money supply expanding or contraction, and is Bitcoin just leading, showing the risk on assets where to go, or has it decoupled completely and it's not following even that money supply expansion so closely anymore? Because if Bitcoin is just a risk on asset, you need more money to go into the supply for it to grow in assets, right? For that protocol to grow in assets and get larger, more users as a store of value. But really, it's driven off that expansion of the money supply if it's a risk on asset, because you can see the same thing as the NASDAQ does the same thing. It follows it very closely, the money supply expansion and contraction. So the question is, if there's $900 trillion of assets in the world, investable assets in the world, which I just spoke about, then is Bitcoin gaining share of that? Is it getting larger as a share of those investable assets? Or is it just following the expansion of the money supply that it goes from 900 trillion to 1 quadrillion to 1.1 quadrillion? Is it just following that? So that's the question. And as adoption continues, is it breaking away and saying, this is now a separate asset, a store of value? And really, to answer your question about institutions and pension funds and endowments of traditional money managers, the real traditional institutions, it's when do they start to understand that Bitcoin is not a risk on asset? When do they start to understand that it is truly a separate store of value? It's a scarce store of value and the ultimate risk off asset when you step back and understand it truly. So when do they get to that understanding? And I think that we're starting to see that's accelerating. They're not adopting it yet, but that the research and the knowledge base is expanding. And that has to do with what we talked about at the beginning, which is the US government is now, they're investing in Bitcoin. And so the game theory is not just sovereigns, but it's everybody. If the US government is investing in Bitcoin, why am I not investing in it? What am I missing? What am I missing as a traditional money manager that I'm not looking into this and I don't see it the same way as other people do? And so as that occurs, and we ultimately get the Bitcoin Act passed by Senator Lummis, whenever that happens, it may take months, it may take years, but once that happens, then you've got the traditional money managers that will say, okay, now it's moved from a risk to own asset to a risk of not owning any asset. And I've got to treat it separately in my portfolio. And that's when you really get that decoupling and adoption.
When it's time to get off zero.
Time to get off.
Where people adopt it out of a fear of not having it instead of a greed of trying to get it.
Exactly.
Right. So yes, I really enjoyed your presentation about the 900 trillion of global assets. What I talked about earlier today was similar to that. I had the same, graphic that we all know, the Jesse Myers chart. The thing I talked about this morning was about the future dollars, though, right? There's $900 trillion of assets today, but there's tens of quadrillions of dollars yet to be printed, right? And those are accessed with debt. And so what I talked about in my presentation, expanding on what you were just saying, was that that when people view it as the lower risk asset, as a safe haven, that's when people would justify having debt to buy Bitcoin, right? These major institutions.
Mm-hmm.
And I think I want to ask you about the bit bonds, because you talk about the treasuries more than anyone else, right? And so I look at this and I say, yes, 900 trillion is cool, but also about all the hundreds of trillions and quadrillions yet to come. And so at what point in that progression that you just outlined do you think are nation states, in particular the US, going to embrace not only holding what they have, not only the Luna's plan of buying with the money they currently have, but with creating new money to sustain treasuries and buy Bitcoin with dollars that don't exist yet? When do you think in this process do the bit bonds really emerge and take over?
Hey everybody, Luke Broyles here, our friend Larry Lepard, and of course, Jerome Powell. Now, Jerome Powell is a cardboard cutout, not actually here, but Larry and I are going to be in person at Camp Nakamoto in October 2025. So, Larry, do you want to share your words and why you're looking forward to it?
I'm really looking forward to it. It's a great event. It's outdoors. It's in New Hampshire. The weather will be good at that time of year. New England's beautiful. So everyone who can break away and come should try and do so.
Yeah. So join. It's going to be a few days. You'll be able to either be in a hotel or in a camp setting, log cabin, camping, whatever you want. So no matter your preference. Larry's going to be there. Natalie Brunell's going to be there. Mark Moss, James Lavish, lots of awesome Bitcoiners and lots of other people that aren't on camera as much, but are equally as awesome. So if you want to make new friends, make new business connections, and most importantly, new memories.
Jerome will not
be there. There might be a cardboard cutout, but they're right.
And that's a good thing.
Right, that's a good thing. But yeah, okay. Thank you, everyone. Get your tickets in the information link in the description below, or reach out to the whatever on the screen. And hope to see you there. There's only 150 spots there, and most of them are selling out pretty quick. So hope to see you there in October. Thanks.
Well, I mean, first we've got to get the stablecoin legislation right? You got to stay. The U.S. government is focused on stable coins, and they know that stable coins will allow for just a broader adoption and usage of treasuries. Meaning that if you're in an emerging market, emerging country, and it's not developed, and you want dollars, now how do you get those dollars? Now, if you have an on-ramp to an exchange and you're able to buy stable coins, the stablecoin legislation is important because it'll show it will allow it'll create that set of rules around anybody owning stable coins, institutions, and all like we talked about, individuals, and that the stable coins just own, what do they own? They own treasuries. So that's really important first, and I think that's what they're focused on right now. Then you've got the Bitcoin Act, right? And then you've got what Andrew Hone is talking about, which is the Bitcoin bonds, right? The BIT bonds. And so, how does that happen? Well, again, broader understanding in the government about exactly what Bitcoin is and why it is so important to hold and to get access to as an asset on your balance sheet. And by issuing those bonds and using some of that capital, most of it, so the concept is to issue a treasury, use most of that capital to for operating expenses of the U.S. government treasury, and then some of it to buy Bitcoin. And then the bondholder would get access to a return that's linked to both an underlying interest rate for that bond and some upside that's associated with the Bitcoin to a certain point. And then the U.S. government and the investor splits the upside from there. It's a great concept, brilliant concept by Hone. And, but the U.S. government's not quite there yet. And they've got a lot of work to do on the front end to get this other stuff sorted out and to understand why Bitcoin is so important. But one thing that would accelerate that is the clear adoption of Bitcoin by other sovereigns. And if you see other sovereigns, this the game theory that other sovereigns are now being forced to consider, research, and possibly adopt Bitcoin themselves to keep up with the United States, that will kind of tip off the United States to the next step. Okay, we own some. What's the next step? How can we then use it to secure that treasury as something that people want to buy all over the world, and it'll give them better protection against the expansion of the money supply that everybody knows that they're doing.
No. One last question for you, because then I know we have to wrap up. But with everything we've just said so far, what do you think? I could see an argument for things are slowly, and then suddenly things just gap up as one of those things happen, and game theory just kicks off overnight in a matter of weeks or months, right? But to your earlier point, that price action would give people the appeal or the perspective or branding of a high risk asset, not something that's stable and low risk, right? So do you think a slow and then gap up on a new big piece of information like that is more likely? Or do you think that this kind of stair-stepped grind up a little, grind, right? What do you think is more probable path?
I think the most probable path is continued volatility, which means that it's not stair-step and it's not just a jump up to the next plateau. It's more like this. And then you'll see one big jump up from that volatility, and then it'll form that new plateau, which is kind of like what we've seen recently. You have the volatility up to 60,000, kind of held that plateau. You have volatility now to over 100,000. It's kind of holding the 80 plateau. So does it then have the volatility of doubling in size overnight? So it's absolutely possible for Bitcoin. If you have the passage of the Bitcoin the Bitcoin Act, okay, or you have something like the U.S. government announced they've sold gold to buy Bitcoin. They probably wouldn't announce it first. They'd probably do it, and then or you have a large nation state announce that they bought Bitcoin, right? So it's maybe one of the BRICS nations or maybe another developed country like Germany. Like if that ever happened, I don't see that yet. But or the EU, or if you had a very large corporation adopt Bitcoin in their treasury strategy, and not doing the volatility play like Michael Saylor is doing for MicroStrategy, but something like a Microsoft or an Apple or one of these massive companies that are holding, tens of billions of dollars on their balance sheets, and they turn around and start buying Bitcoin. That could then propel it to a level, increase volatility for a moment, but to the upside mostly. So, and that's what I'm looking for.
So you don't necessarily expect the Omega candle one night, and you don't necessarily expect it to be a slow grind, but up and down, pain both ways.
Yeah, pain both ways for a while, but that's good. We embrace the volatility because it's it gives opportunity.
Volatility is vitality.
Right, exactly.
Jay, thanks for your time.
All right, thanks for having me.
Hey everybody, Luke Broyles here, our friend Larry Lepard, and of course Jerome Powell. Now Jerome Powell is a cardboard cutout, not actually here, but Larry and I are going to be in person at Camp Nakamoto in October 2025. So Larry, do you want to share your words and why you're looking forward to it?
I'm really looking forward. It's a great event. It's outdoors. It's in New Hampshire. The weather will be good at that time of year. New England's beautiful, so everyone who can break away and come should try and do so.
Yeah. So join. It's going to be a few days. You'll be able to either be in a hotel or in a camp setting, log cabin, camping, whatever you want. So no matter your preference. Larry's going to be there. Natalie Brunell's going to be there. Mark Moss, James Lavish, lots of awesome Bitcoiners and lots of other people that aren't on camera as much, but are equally as awesome. So if you want to make new friends, make new business connections, and most importantly, new memories.
Jerome will not be.
Jerome will not be there. There might be a cardboard cutout, but they're right.
And that's a good thing.
Right, that's a good thing. But yeah, okay. Thank you, everyone. Get your tickets in the information link in the description below, or reach out to the whatever on the screen. And hope to see you there. There's only 150 spots there, and most of them are selling out pretty quick. So hope to see you there in October. Thanks.